This is a preview video. Thanks for joining us at xm.com. It's an important week for the euro as GDP data is to be released later today, followed by CPI data on Thursday. I'm Cristina Marujos. With me today is our investment analyst, Cristina Barcenidou. Cristina, inflation increased unexpectedly in December across the Eurozone after months of declines. What might we see in this week's report?
Hi, Christina. It's nice to see you here. That's right. Inflation rose to 2.9% year on year in December for the first time since April. But the core measure, which excludes volatile prices such as food and energy, continued to trend down, falling to 3.4% year on year, suggesting that inflation is indeed moving in the right direction. Now, what we will see in January? Well, we may see a slight pullback. I think analysts expect a slight downturn to 2.8% for the headline inflation, and the core measure is expected to ease to 3.2% year on year. Well, if that proves to be the case, the data could still support the case of rate cuts in the year ahead, especially if the core measure also keeps trending down. The ECB didn't show any commitment to rate cuts last week because it still sees upside risks to inflation, including more escalation, potential escalation in the geopolitical tensions in Middle East and Ukraine, as well as the pressure for higher wages in Europe, which could increase labor costs and therefore could force businesses to share their increased labor costs with consumers. But despite that, investors remained quite confident that the rate cut could happen as soon as in April, and they are even more confident that a rate cut to 3.5% could happen in June, probably because the next update on wages will be after April's ECB policy meeting, which means that the ECB might be much more informed about, will be better informed about the economy during June's policy meeting. Honestly, it's difficult to predict the future, especially when, when the geopolitical tensions are rising and are certain. So the central bank has wisely didn't provide any clear signals about rate cuts. Nevertheless, I think that investors like to run ahead of central banks, and they will probably pay attention to inflation data this week in order to get some direction.
And taking that into account, Cristina, how would we see the single currency perform this week?
Well, the euro might have a very challenging week, actually. If inflation falls faster than analysts expect, that could add to more pressure to the euro, unless investors start to think that lower interest rates could bring some relief to the fragile Eurozone economy, in which case the euro could move a bit higher. Now, as regards euro-dollar, the dollar could also face volatility this week. The FOMC policy announcement is this Wednesday, so if the Fed provides more details about when it will start cutting interest rates, that could add pressure to the dollar and therefore could help the euro-dollar to rally. Alternatively, if the Fed believes that it's better to delay any rate cuts for now, shifting rate cut projections towards the end of the year, that could strengthen the dollar and could squeeze euro-dollar.
Cristina, thanks so much. This was a preview video. Thanks for watching at xm.com.